Hello everyone. This is the pre-market report video for today, March 16th in the Indian stock market in terms of Nifty and Bank Nifty. First, let's discuss what happened in the Indian market. Then we can discuss about what happened in the US market, since it's important to understand what is causing the additional issue at present in the Indian market. Let's start. Yesterday, Nifty opened a gap up of over 100 points and it maintained positive 50 to 100 points till 12 pm. Then after that, once the European market opened, it continues to slide and closed below 17,000 mark. Now coming to the issue, whether we accept it or not, India is a partially rainfall based agriculture economy. And most of you know what is El Nino means. For those who don't know, El Nino, which means little boy in Spanish, refers to the warming of surface water in the Pacific Ocean. This thing happening in the Pacific Ocean was the main cause for the warmer winters, hotter summers and a deficient monsoon in whole Indian subcontinent. Here, if required, please pause the video and have a look. This is how in olden days El Nino affected India. I mean, in the last 7 times, 5 times it reduced the average rainfall by 10% and thus the agricultural grain production. Now coming to the present day, last week Indian Meteorological Department issued the warning that India had a hottest February month since 1901. I mean hottest February in the last 120 odd years. Also, our channel regular viewers might remember that already Indian government issued the warning about expecting power deficient. Yesterday, early morning, India's Meteorological Department issued the warning that India is expecting to suffer heat waves between March and May with temperature rising over 8 degrees Celsius higher than that of the average for that time of the year. And thus the plantation in April and May is expecting it to suffer. So this warning straight away puts pressure on agri and FMCG stocks from the morning, and that's the reason early morning SGX Nifty was so bullish, but that was not completely transferred to our spot Nifty. That's the first issue. Hereafter in this year, it's really important we need to keep an eye out for monsoon and heat waves related info. Then the Saudi Arabia's minister ruled out supporting Credit Suisse Bank. This and the UK's budget made the European market really negative and thus it pushed our Nifty really negative. So these three were the issues yesterday. Heat waves, Credit Suisse Bank and UK's budget. And thus realty, FMCG, auto and banks were down by 0.5%, whereas power sector increased over 1%. Then the another sector that rallied yesterday was metal, increased over 1% due to the good Chinese industrial production data. Regarding institutional activities, FII for the 5th consecutive day net sold shares worth approximately 1,270 crore rupees, whereas again DII net bought shares worth approximately 1,820 crore rupees. Anyway, moving on to the US market, it's back to the negative global sentiment. Thus, last night S&P 500 and Dow Jones closed in red. I mean, first S&P Global Credit Rating Agency downgraded the credit rating for the bunch of regional banks. For example, they downgraded the First Republic Bank from A- to BB+. In simple English, from investment grade to literally to the junk status. This, along with Credit Suisse Bank issue, puts the US bank under huge pressure. Then, US Census Bureau released the month-on-month US retail sales data for the February month and it comes as contraction of 0.4% against the expansion of 3.2% in the January month, which also kind of showing the signs of weakness in the US economy. Again, all these made the US market to close negative. Dow Jones closed down by 0.87%, S&P 500 closed negative of 0.7%, Nasdaq closed flat thanks to the last minute recovery and VIX increased 10% and moved above 26.2. So basically only tech stock supports due to the drop in 10-year Treasury bond yield as it now trades below 3.5%. Just for info, because of all this and fundamental recession fear, made the CME Fed Watch tool to predict over 50% probability that Fed will pause the interest rate hike in the upcoming FOMC meeting. It's really crazy in stock market how things quickly changes. I mean last week the same tool predicted over 80% that Fed will increase 50 basis point. Now it's saying no more interest rate hike. Anyway, moving on, oil dropped another 4% At this time of this video, Brent crude oil was traded near 74.3 US dollars per barrel and WTI crude oil was traded near 68.5 US dollars per barrel. Last week, same day, WTI crude oil was traded around 80 US dollars per barrel. Anyway, oil price drop is always positive for India. Then, regarding Indian areas, it's too much worse than that of the US market. ICICI Bank dropped near 3%, Infosys ADR and Wipro were down by over 2%, whereas HDFC Bank closed over 3% down. Honestly, I didn't expect this much negativity in Indian areas. Then about SGX Nifty at 3 am Indian Standard Time, it closed at 16,925. It's kind of indicating the 40 to 50 points gap down opening. As a summary, things are not good at all. SGX Nifty only indicating 50 points gap down, but equating the Indian area to spot indicates over 200 to 300 points negative from the present level. I'm hoping it not to happen, but let's see. Please don't blame me if market opens and trades completely positive means. I'm just sharing my opinion and compiling all the available macro informations. Now coming to technical, yesterday both Nifty and Bank Nifty on the daily chart forms a long bearish negative candle that has completely overlapped the similar negative previous candle. Here, please note this is not an engulfing pattern since the previous candle is red. If it's a green one, then it's called an engulfing pattern. Anyway, technically, this pattern indicates an inability of the market to sustain. However, normally such overlapping candles after a reasonable downward correction hints at a possibility of reversal pattern. At present, the RSI value is 31. It's kind of an oversold region and thus the positive divergence pattern has started to form in Nifty RSI daily chart. So, if Nifty takes support in the range 16,900 to 17,000, then there is a possibility of a rebound. But if it breaks 16,900, then the correction can further push down to 16,750. However, on the higher side, if it move above 17,000, then the rebound can be possible up to 17,200 to 17,300. Moving on to open interest analysis, based on change in open interest in Nifty, yesterday there was a small number of put options were added between 16,650 and 16,900. But again, there were some put options unwinding taken place between 17,000 to 17,400. And there are good number of new call options were added at 17,000 to 17,400 and the maximum new call options were added at 17,100. So 17,100 is the resistance to break. At present, the put call ratio is 0.48. From overall open interest data, there are still huge number and maximum put option open interest is at 16,800 and followed by 16,700. So possibly 16,800 can act as a good support. Then in terms of Bank Nifty change in open interest, there are put options unwinding taken place at above 39,300 and significant call options were added at above 39,000 and the maximum new call option is at 39,300 and 40,000. So 40,000 is the resistance to break. From open interest data, the maximum put option open interest without call option is present at 38,000. So 38,000 looks like a good support. In Bank Nifty, the put call ratio is much worse than Nifty. It's in the range of 0.45. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm. It will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.